of unpredictables actually, Shrishti, that has actually led to such a decline coming in the market. Sixth day in a row is what the markets have been falling for. And as you can see, today we are sub 18,900 mark as well for the benchmark indices. And in fact, the selling is pretty furious. As you can see on your screen, at the day's lowest point coming in for the benchmark indices, no respite on the screen. Axis Bank was the only Nifty counter that was trading in the positive territory, and yes, that's the only one that's reacting to his numbers and holding the fort, bucking the overall market weakness. The only stock in the Nifty that is in the positive territory. Nifty Bank moving in tandem with the benchmark indices. Broader markets, the carnage over there is much sharper than expected. In fact, Shrishti, none of the sectors are also gaining in trade today. So it's carnage all across the D street, and this is on back of the weak global cues. You also have concerns over the run-up in the broader markets as well. But is this just a correction, or will this turn out to be a prolonged sell-off? And how are the indices actually stacked up right now? Let's go ahead across straight to Somit to get that insight. And Somit, 6th day in a row, Nifty sub that 18,900 mark at 4-month low levels. And when will this stop?
Well, I definitely don't have an answer to when will this stop, but I can just give you a perspective of how bad the fall has been in the last 5 trading sessions. Now, for Nifty, if you see in the last 5 trading sessions, they have declined by around 3.5%. Mid cap and small cap, the fall has been much wider, around 4.6% for the small cap and around 5.3% for the mid cap index. Now, what levels they are trading? Nifty 50 is trading at its lowest level since June 30th, and it's below its 50 and 100 DMA. The Nifty mid cap index is trading at its lowest level since August 25th, and it's trading below its 50 DMA, while the small cap index also slipped below its 50 DMA post yesterday's fall, and it's at lowest level since September 1st. On the RSI front, if you see, now 30 is the oversold zone, and Nifty 50 and Nifty mid cap are trading at around 32, that is the RSI level, while the Nifty small cap 100 index RSI is around 41. And for all the 3 major indices, the RSI is at its lowest since March 2023. Now, this is a list of percentage of stocks that are still trading above the 200 DMA. Now, for Nifty 50, 76% of the stocks are trading above its 200 DMA. This number was close to around 94% a while back. For Nifty for mid cap 100, 80% of the stocks are trading above the 200 DMA, and this number was around 96% a while back. For small cap, around 78% are trading above 200 DMA, and while back this number was around 91%. Now, on the stock specific side, in Nifty, only 2 gainers we have seen in the last 5-day move. That's Nestle and Bajaj Auto. Both the stocks are up around 4%. While on the loser side, we have Wipro, UPL, Adani Enterprises, NTPC and Divi's Lab, and all these stocks have fallen anywhere between 6 to 7%. When it comes to the mid-cap 100 index, only 5 stocks have managed to gain in the last 5 trading sessions. That's Prestige Estates, Persistent, Ipca Labs, United Breweries and Tata Elxsi, and the gains have been anywhere between 1 to 6%. And on the losing side, if you see, top 4 are PSU companies: IGL, Bank of India, Mazgaon Dock and BHEL, and the fall has been anywhere between 12 to 18%. For Biocon, the decline has been close to 12%. When it comes to small cap index, there have been around 9 gainers. Top 5 are BAC, Angel One, Suzlon, Credit Access Grameen and Wellspun India. And on the loser side, again, NMDC Steel, Hudco are PSU companies. MRPL is also a PSU company, while there is HFCL and Zenza Tech also among the top 5 losers. Now, when you see beyond the indices, as per Bloomberg, there are close to 5,686 stocks listed in the Indian exchanges, that is BSE and NSE, and 61% of these stocks, that is close to 3,485 stocks, have declined in the last 5 trading sessions, and close to 2,036 stocks have a market capitalization of less than 500 crore rupees, which means that the fall has been much more in the micro cap space, that is less than 500 crore of market capitalization. Last, on the sectoral side, if you see, Nifty PSU Bank Index has declined the most, around 7% of fall, followed by Nifty Metal, while the fall was the least when it comes to the Nifty Auto Index, which has dropped only 2%. And lastly, when you compare with the global indices, the fall has been not that bad for the Indian markets, because markets like S&P Philippines have declined much more than the Indian market, which has declined around 3.4% on dollar terms, while markets like S&P 500, Philippines, Korea, FTSE 100, China have declined much more than the Indian markets in the last 5 trading sessions.
Thank you so much, Somit, for putting into perspective how bad the fall has been, especially in the last 5 today is in India. Like you mentioned, that we are not declining solo, and there are rest of the markets as well which are seen to be declining even more. But everybody wants an answer to the question that when this selling will stop. So let's get an expert take on that. And earlier today we spoke with Gautam Shah, CMD, founder and chief strategist at Goldilocks Premium Research, and he sees further correction in the market and suggests that heavyweights like HDFC Bank and Reliance need to perform for the markets to recover. Let's listen into his take.
We have been working with a target of about 18,900. We are at the doors of it. This is an important support. The market could see a bit of a bounce from here, but I don't think we are out of the woods as yet. There is clearly a lot more downside. There is going to be a lot more price correction and time correction, and the markets are not going to turn around in a hurry, something that we've got used to in the last 6 to 8 months. So if and when 18,900 were to break, I think another 400-500 points downside towards 18,400-500 is quite likely, and one should not indulge in bottom fishing even now. I think there is just too much leadership coming on the downside from many stocks and many sectors, something that we've not seen in a long time. And the point which I made earlier, when two big heavyweight stocks like HDFC Bank and Reliance do not perform and actually underperform, the market will always remain under pressure. And to add to all of this, I think mid caps and small caps, given the kind of rally that they saw in the last 4 or 5 months, almost vertical and parabolic in nature, there is clearly a lot more room for downside there as well.
Gautam, I have lots of follow-up questions. First things first, how much more downside?
I'm very clear about the trajectory. When you have strong downtrends, you really do not know the magnitude, or it's too amateurish to even call the magnitude of the downside. I think in terms of working numbers, we actually put it out in our big picture report at the starting of the month that 18,400-500 is the number where we are looking at serious support coming in. Not to say that it will be the worst case. I think the chances of even this number going eventually is pretty high, but we will review around that point. But I think having said that, I think this is the time to be conservative. This is the time to be cautious. This is the time to be in the top 100, to be in top quality, because I think not just India, I think global markets are under pressure. I mean, look at the Russell 2000 in the US. It's near a 52-week low. People talk about the Dow, people talk about the Nasdaq, the S&P 500. Those indices might not be as relevant in the Russell 2000. Look at some of the Asian markets, the kind of breakdowns that we've seen. Look at the way some of the European markets have behaved in the last 1 month. So it looks like a global scenario right now, and unfortunately, given all the geopolitical developments, it's only fair that the markets react this way.
All right, so that's the word coming in from Gautam Shah on where he sees the markets headed, Shrishti, and there's certain key triggers. He did say that he's overall cautious on the markets. He said there's time to be cautious on the market. For Nifty Bank, in fact, he's expecting further downside for Nifty Bank as well, so definitely no respite in sight, at least for now. And yes, he's saying that Reliance Industries and HDFC Bank, there's scope for further downside, at least 10% is what he had said this morning. So those are the key takeaways coming in from Gautam Shah. And on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we will start taking your query, viewers, so don't go anywhere.